Hello traders, welcome back to the Forex Geek, where we dive into the tool that can help you make smarter trading decisions. And in today's video, we are going to be talking about the two-crow candlestick pattern, a powerful bearish reversal signal that can help you spot potential market turning points with precision. If you have ever wondered how to identify when an uptrend might be losing steam, or how to position yourself for a potential reversal, this is the video for you. Stick around until the end, as we will not only break down how this pattern works, but also show you how to use it effectively in your trading strategy. The two-crow candlestick pattern is a three-candle formation that signifies a potential bearish reversal in an uptrend. Understanding its structure is crucial for identifying it accurately on the chart. Let's see the components of this pattern. The component is, you first observe the first candle. This is the first candle that confirms the ongoing uptrend. This sets the stage for the pattern to develop. The second candle is a bearish candle that opens above the close of the first candle, but closes within the body of the first candle. This indicates potential shift in market sentiment. The third candle is another bearish candle that opens within the body of the second candle and closes lower within the body of the first candle. This confirms the weakening of bullish momentum. These three candles together form the two-crow pattern, visually resemble two black crows hovering over a white candle, as we can see from the pattern on my screen. Why does this matter? The two-crow pattern is significant because it shows that sellers are beginning to gain control even in an uptrend. The second candle's inability to push price and the third candle lower close both suggest that the bullish momentum is fading. Now let's see how we can implement this strategy on our chart. First of all, when you spot the pattern, you would confirm that this pattern is in an uptrend. You would confirm that it is in an uptrend, and like as I can see, price is making a series of higher lows, higher high, higher lows, higher high, higher lows, and is making to form a higher high. This is what this pattern is all about. After acting on the pattern, ensure that the market is in an established uptrend, looking for higher highs and higher lows to validate the trend. Secondly, we wait for the pattern to be complete, and as I can see from here, after my bullish candle, I saw a gap in price, followed by a bearish candle, followed by a bearish other candle as the third candle on the chart. This is our pattern. The third candle closed within the body of the first and second candle and is essential for the confirmation. Confirm bearish sentiment using additional indicators like the RSI or the MACD to verify the momentum shift from bullish to bearish. If we are to use this pattern to enter a trade, after we see the third candle close, we are going to enter the trade and put our stop loss just above the high of the second candle. This ensures that your risks are limited in the market, and unexpected continuation to the upside wouldn't take you out on a big loss. How do we exit? We target a 1:2 or 1:3 risk to reward, or we can trail our stop, or we can exit at key support levels. As we can see in this area, we can exit at key support levels or key previous swing areas in the market. For additional confirmation, you wait for a fourth candle to confirm the bearish momentum. A strong bearish close following the two crow pattern strengthens this reliability. If you decide to enter after the fourth candle, it is still a good trade to confirm yes, the trend is in the direction that you are intended to go to. Now let's understand the advanced consideration. While the two crow candlestick pattern is reliable, bearish reversal signals is also a reliable pattern from this two crow candlestick pattern. They are advanced variations and nuisance that traders should consider for deeper insights and better decision making. The upside gap two crow pattern. A notable variation of two crow pattern is the upside gap two crow pattern. This three-man formation also signals a potential bearish reversal but has a distinct character, which is the first candle has a strong bullish candle to the upside. The second candle is a small bearish candle that gaps higher at the open but close below its opening price, as you can see in this area on your chart. This creates a gap from the first candle close. The third candle, a large bearish candle that opens higher than the second candle, opens but close lower than its close. So this is the third candle, though it is still above the first candle. This variation highlights a weakened uptrend as sellers begin to dominate, but it also introduces an element of uncertainty. The gap between the first and the second candle can sometimes indicate indecision, making it less reliable than the standard two crow pattern, as you can see from the diagram in this area. Let's see if we can spot another pattern to make it easier for us to explain, to understand the concept of the gap to the upside gap two crow candle. This is another pattern I can see. Even if this is not that complete, but we can see price gapped and pushed in the bearish direction. No, this is not a good example. Let's look for a better example. This is another example of the upside gap two crow pattern, where the first candle has a strong bullish candle and the second bearish candle gaps higher, followed by the third candle with a large bearish candle that closes lower than its closing area. This is an example of a third one, though it is not a very strong example, but this is practically what we should expect while making use of this trading strategy. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on your notification bell so that you wouldn't miss out on more trading tips and strategies. Thank you for watching and I will see you in the next video.